Hey guys, what's up? This is Francisco with Valorizo Capital, and today we're gonna go through the weekend video. We're gonna take a look at some of the charts. We're gonna take a look at the ETFs, of the main ETFs, and then I'm gonna share with you some of the leading ETFs, and we're also gonna take a look at commodities because I think that there might be a little bit more of upside in some of them. So let's start looking at some charts, and remember, guys, that everything that we're gonna take a look in this video is based on, in my personal opinion, and is not financial advice. So now let's start with some charts. Right here in the screen, I have the S&P 500, the SPY, and as you can see, we had this bottom information, this head and shoulders bottom information, and now we had a really strong bounce, right? We have been rallying for what, 1, 2, 3, 4, 5, 6, 7, almost 9 days in a row. Right? We had a slight pullback here, a slight pullback below the 200 SMA, which is this pink line here, and it acted kind of a bull trap going into the end of the week, right? Then we have a final squeeze going into Thursday and then Friday. What I think is really interesting is, for any of you guys that follow Fibonacci trading and Fibonacci analysis, if we do a quick analysis from this high right here all the way to the low, the 0618 retracement is coming all the way right here into 453.49, and that usually acts as a really strong level of resistance. And I wouldn't be looking to get long right here, right? I usually like to get really good odds in my trades. So in my opinion, what I'm looking for to next week is perhaps a pullback into this a pullback to retest the 50 daily moving average, which is the purple line here. I think that will be a pretty awesome, that will offer a pretty awesome risk reward for going long and then continue to follow this market to the upside, because I think that we already enter into a new uptrend, but we have to be really patient, right? We have to wait for opportunities. We have to be really opportunistic and wait for those moments in which we can risk really little to make better money in our odds. So in my personal opinion, I wouldn't buy it here, right? Be aware of these levels. We also have this pivot up here in 458, and we have a strong gap right here, right? We have a strong gap between price and the 21 exponential moving average. We have this gap right here, and I prefer to see us pulling back a little bit, test those levels. If we get this cross between the 21 and the 50 daily moving average, that's going to be a really bullish cross. We had a bearish cross right here, and then we saw what happened. So I'll be looking for that cross, and I'll be looking for a retest of that level for me to get in the market. But this one is, the market is looking really good to the upside. And then for any of you guys who follow me, you know that I'm a fan of the quant pivot levels, which are basically levels that the computers are looking for. And we can see that the monthly quant pivot is coming right here as well in that 0618 level, and the probability of price closing above that level is somewhere below 20%. So I will just be waiting for better odds in my money. And just to corroborate that, let me take a look at the statistics. Here are the statistics, and we can see that the probability of closing above H1 by the end of the month is only 23.6%. So I just prefer to wait for a pullback and better opportunities in this ETF. So that one is looking really nice, and now start moving a little bit faster here. Here we have the QQQ. Pretty amazing, right? Pretty strong rally from the bottom, and now we got 4 daily closes above that 50 daily moving average, and I'll be waiting. You can see that the red bars here kind of a little bit higher, showing a little bit of distribution, but of course price is the first leader. But I'll be waiting for a retest, right? For a retest of this 21 exponential moving average. We can see the gap between price and that 21 exponential moving average. So I'll be waiting for a retest to get a little bit more of an opportunistic entry into the market. And then I'll be looking for a retest all the way up here into that 200 daily moving average and this 370 pivot up here. So this one is looking pretty good. I'll be only looking to the upside, but looking for a retest of the levels first. Now taking a look at the DIA, which is the Dow. We can see, right, kind of a head and shoulders bottoming pattern formation as well. We had this move up, kind of flagging up here above that 50 daily moving average. We can see that the volume has been declining, which is a good sign. But of course, I prefer, right, I don't want to get long right here at the 200 daily moving average, and we have this very strong gap. We have this kind of pronounced gap between that 21 exponential moving average and price. So I'll be waiting better for a pullback into support, and then buy that pullback and look for more upside, perhaps into this pivot right here, which is somewhere around 356 to 360. So that one is also looking good to the upside. And here we have the IWM, which is one of my favorite ETFs here. Has been lagging a little bit, but I really like how it has been trading, right? As you can see, we have this pivot right here at 209, but we have seen that price came all the way. Now it's trading above the 50. The 21 exponential moving average already crossed above that 50 daily moving average, and we're just consolidating gains right here in decreasing volume, which is actually pretty constructive, right? If we happen to pull back next week and we retest that 50 daily moving average, I think that's going to be a really great opportunity to position yourself in anticipation of what could be a high probability breakout and a move all the way up here to that 200 daily moving average in the daily chart. So that one is looking really, really nice in the IWM. And here we have the IWO, which is very similar to what we have seen, and we are seeing that this one already tested the 50 daily moving average. We did it on really low volume, and now we are trading above that 50. We already retested it, and now I'm looking for perhaps a really strong move here all the way to 266. And of course, be aware that if we get a couple daily closes below these moving averages, we might continue to the downside. But for now, the way that the market is looking, how some stocks are acting, the volume that is coming in, I think that the probability of us going higher is actually more probable than us going lower. So now let's move into the next one. Finally, let's take a look at ARKK. I always like to take a look at ARKK. Some of the stocks that I like to trade are here in the ARKK ETF, but of course, a lot of them are lagging significantly. And we can see that ARKK, right, in comparison to the old ETFs, ARKK continues to be below a declining 50 daily moving average, which is the purple line here. So there's no reason to focus on this, right? This is lagging. If we want to focus to the long side, we have to take a look at things that are at least trading above that 50 daily moving average, which is actually really important. And it just makes your life so much easier because the 50 daily moving average is such an important level for institutions, for institutional support or institutional resistance. And we can see that ARKK continues to trade below that 50 daily moving average. And one scenario that I'm thinking, if we happen to pull back next week, I think there's a high probability that ARKK is probably going to make a higher low here, right? Can we make a higher low? Can we start to get this head and shoulders bottoming pattern and then form a proper base for us to close and finally move above that 50 day moving average? I think that would be a little bit more constructive, and it's definitely something that I'm going to be looking at to perhaps take a look at some of the names in the ARKK ETF that are outperforming, and one of those names is SKU, and we're going to take a look at that name in my other video for the weekly watch list. But that's one name that I'm really looking at in the ARKK ETF. And now let's start moving into some of the ETFs which I think that are outperforming and are really interesting. So let's start with some commodities here. I have the USO, which is the ETF for crude oil. And we can see that we have really this very, very strong move to the upside. If you guys have been following me, we mentioned that we got extended, very, very extended. You can see this is the three ATR Keltner channels. We can see that we got really extended above that, and like a rubber band, we snap back all the way down here into the 21 exponential moving average. We undercutted it, and now we're moving higher. Pretty interesting volume on the days that the price moves up. Of course, I don't want to buy it here. Perhaps you could get into this pullback into the 8 exponential moving average, but I prefer, as you can see, I have an alert here, looking perhaps for a pullback into that 21 exponential moving average, and then start building a position for perhaps a move higher, or at least a move to retest this high right here, but I wouldn't do it all the way up. Now let's start looking at wheat. I don't know if many of you guys trade wheat, and I also have an alert right here into the 21 exponential moving average. A really strong move to the upside, right? We got extended above this 3 ATR, and now we're just pulling back, right? We're pulling back. We're kind of basing here. If you want to get opportunistic about it, I think that you just wait for that 21 exponential moving average, looking perhaps for a break of these pivot right here, and then a move up all the way to the 3 ATR. I think that's looking really interesting. And as long as this one continues to trade above the 21 exponential moving average, longs are valid in wheat. And usually this doesn't move much, but right now with the volatility, it's actually making some really interesting moves. Let's take a look at UNG. Let me just remove this right here. What is really interesting about UNG, right? I was in on this, right? I got in right here, that 21 exponential moving average. I got a stop below this level. It stopped me out, and then it made just such an amazing move. But we know that that's the market. That's how the market trades. And sometimes we get into some really nice names, and sometimes they take us out, and right after they take us out, it moves really strong to the upside. So what I like about UNG, right? Some really nice volume in these days up. Of course, I wouldn't buy it here, right? It's testing this double top here. If anything, you can treat it as a short if you want, having a tight stop right above it, right? We're extended into that +3 ATR level, but right, really nice trend, right? Price is moving above that 8 exponential moving average. Price is moving above that rising 21 exponential moving average. So I think that any pullbacks into support into that 21 exponential moving average or that 8 exponential moving average are going to provide some really nice opportunities to continue to play this trend as long as it lasts, because that's what trading is about. You find a trend and then you just trade it as long as it wants to trade. So I think this one is looking pretty nice for some longs. That's UNG for natural gas. Now let's take a look at some of the names in gold, right? This is GLD, the ETF for gold, and we can see that GLD, right, we had a really strong move, basically coming into kind of a double top territory here, right? Let me just mark this really quickly, right? We came into double top territory, and then we pulled back all the way, right? We got really extended from that 3 ATR, right here into this island gap, and then the rubber band got extended. We came all the way to that 21 exponential moving average. And now we're just resting. So this is actually pretty constructive. I like the way this looks, right? If you can see here, we kind of came back all the way to retest this level of support here. And it's acting pretty constructive. I really like it a lot, right? We came here, we test this level, we held, we jump. But now I think there's a lot of people that perhaps chase this move. And I prefer to wait a little bit, right? Perhaps we're going to get perhaps this 50 is going to move up here. Perhaps we're going to test it. That will be an amazing opportunity to get long, in my opinion. But of course, we have to take it one day at a time. And there's a chance that gold just wants to go right now. I'm going to wait a little bit. I have my alert set here. Perhaps we're going to get a test of that 50 daily moving average. And that test, I think, is going to be the real opportunity, the real opportunistic way to get into some long positions in GLD. So I'm being a little bit patient with that one. Now here we have SLB, kind of similar, right? Kind of similar. We got extended above that 3 ATR, the rubber band, boom. It got us all the way back here. And now we just consolidating sideways, right? We came here, we test this breakout level. And now my question is, can we get a pullback into that 50-200 daily moving average? Perhaps, right? I don't know if it's going to happen. Perhaps it doesn't happen. Perhaps SLB just consolidates here, then forms a little bit of a shelf and breaks out and continue going. But I'm going to wait a little bit. I'm going to try to be a little bit opportunistic, because with these commodities, you kind of want to buy them when they look the worst, because if you buy them, if you chase them, they usually are pretty volatile and they can take you out of your positions really quickly. So that's what I'm looking at with SLB, which is the ETF for silver. And now let's take a look. Right here we have GDX, which is the ETF for the miners. And this one is looking pretty awesome, right? We have the kind of the double top situation here. We pull back all the way to the 21 exponential moving average that offer a really nice entry. And now my question is, and let me just take out this alert. Now my question is, can we, right? We're coming kind of in this shelf. This is actually looking pretty constructive. Can we get another pullback to that 21 exponential moving average? I think that that will be a real opportunity to get some long positions into gold, anticipating a breakout of this shelf and then a continuation of this move higher. That's actually looking pretty nice. And then let's go into TAN. TAN ETF, this one is I think this one is looking pretty nice, right? We have that move into that 3 ATR level. We had the pullback, that pullback into support, that confirmed that buyers are actually looking to push this higher, right? So that pullback into support, right? We had the move above the 50. We actually retested the 50. We move out to the plus 3 ATR. And now we retested that 50 daily moving average again. And now we're moving higher. You can see the volume is looking pretty nice. So the only level that I'm watching here is that 200. And as soon as we can get above that 200 daily moving average, I think that's going to trigger a lot of probably short squeezes in this ETF, given the nature of how investors and people are betting against solar names. I think that could trigger a really strong short squeeze and take this much higher. So this one is looking pretty nice, right? Nice pullback into that 50, nice move up. Now we're finding a little bit of resistance here. Can we get another pullback to the 50? I don't think so, right? We already tested it twice. The probability of us testing that daily move, that 50 daily moving average a third time is actually not that great. So I think that you can get long somewhere around this 21 exponential moving average. That should offer a really nice risk reward. You can use perhaps a level below this gap as your stop, and then anticipate probably a breakout all the way above that 200, and perhaps we're going to get a stronger move to the upside. So this one is looking pretty nice. Now let's take a look at XLE, right? A lot of eyes in XLE, right? We had a breakout here, had a really strong move to the upside. We retested that breakout, which offered a really nice entry opportunity. And now we're just moving higher, right? Now we have this shelf here. We close above it, nice volume. Can we get above this? I think that we can. And this one is just going. Maybe you can buy it as a breakout here, have your stop right here. But my style of trading is just waiting for pullbacks into support, into that 21 exponential moving average. And that way I can manage my risk better. But this one is looking really nice. Now let's take a look at the XLV. I mentioned this one on my Twitter account. You can see that we had a really nice base here, really nice double bottom. We undercutted this one, so this one is acting pretty well. And now we finally, right, we find resistance at the 50. We find resistance at the 50. Finally, we broke above that 50 daily moving average. And now the question is, are we gonna retest that 50 daily moving average, or are we gonna at least test that 21 exponential moving average? Given the gap between price and that 21 exponential moving average, I prefer to wait a little bit here. Perhaps we're gonna get a pullback next week. Perhaps we don't. But if we get one, I'm gonna be really aware of these levels right here between that 21 exponential moving average and that 50 daily moving average in the XLB. Now let's move fast into the XME, and this one is just going, right? We had this pretty amazing base. Let me just take that Kellner channel out of the way so we can see this better, right? We have this base here. We had a really strong breakout. We actually retested that breakout level. Huge, really strong move to the upside. We got a little bit extended, retested that 21 exponential moving average, and now we just continue higher. This is actually textbook of what you're looking for when trading a base, right? Like take a picture of this, save it, because this is really textbook, right? We have a really strong base. Let me just erase that. We have this really strong base. We have the breakout. We have the retest of the pivot. We have the really strong move to the upside. We got extended. We tested the 21 exponential moving average, and now we're moving higher. So this is what a trend looks like. This is something, right? This is what the beginning of a trend looks like, is this right here. And this is the confirmation of the trend. And now what you're looking for, you're looking to buy that 21 exponential moving average. So if we get a pullback to that 21 exponential moving average, you should assume that what is happening will continue to happen until it stops working. So I don't think that you buy XME names all the way up here, but if we get a pullback to that 21 exponential moving average, I think that is going to offer the real opportunity for you to get into some of these names. And now let's take a look at XLV. Kind of similar, right? We have and this is actually, right, this is coming into that right side of the base, right? We have this base here. We have this failed breakout. Now we have the double bottom, undercut here, and now we got a break above that 50 daily moving average. You can see that we found resistance at that 50 daily moving average, and now we finally broke above it. So I wouldn't be looking to chase it here, but if we get a pullback all the way up here into that 21 exponential moving average, because you can see the gap between price and that 21 exponential moving average is really big. I think you should wait just for a pullback to get a better entry and to get better odds on your money, because that's what trading is about. Trading is about getting the best odds in your money that you can, so that you can manage risk and then have, it doesn't matter how many losers you get, but if you win, when you win in a considerable way, that by the numbers game is gonna end up paying you, as long as you have a positive expectancy. But of course, that's a conversation for another video, but that's what you're looking to do. But yeah, really, really nice moves. Those are the ETFs that I want to take a look with you guys. And now let me just show you 3 more charts, and then we're done with this video. This is the first chart. This is the bond spreads. And as you can see, right, this was a little bit concerning, right? We were breaking above this 153, and that suggested that investors were taking less risk in the market. And usually when we get these kind of really high moves to the upside, we get some kind of we enter into more of a bear market territory, and we saw that happened on March. And then we, of course, came all the way back here, and this actually was a failed breakout. So that's actually really encouraging. So now my question is, can the bond spreads move below 148? I think that's going to be a really important signal that will suggest that we are entering in what could possibly be a sustained uptrend that could last, we don't know, right? 1 month, 2 months, 3 months. We just play it as it goes. But this is actually really encouraging for the bulls, and it's looking pretty nice. Now let's take a quick look at the put call ratio. And this is something that makes me believe that we might pull back next week. Why I'm saying that, right? You can see that the put call ratio, the way I look at the put call ratio, I look at it on a daily basis, because I want to understand kind of the psychology of the traders on a daily basis. I just don't want to see a line, right, and be like, oh, we are above 1, now this and that. No, I wanna understand what is happening day by day. And you can see that the last time that we had a reading below 0.50 was all the way back here, right to the beginning of the year. And then we have basically been trading all the way above this 155, and most of the days have been closing above 170. So what is this telling me, right? For the past week, we have been closing below 0.70. That means that participants are bullish, right? Participants are bullish, but they're getting a little bit complacent on the past few days. Why do I say that? Because of this candle right here. Because basically we open all the way below 0.50, which means that a lot of people are buying calls. A lot of people are chasing this. So that's one of the signals that I'm watching that might suggest that we might pull back a little bit. We just do some back and filling, or perhaps just trade sideways for a little bit of days and chop some people out. So be aware of that. I think this is getting a little bit complacent just on the short term. I think actually that the uptrend will continue. And then finally, this is the UXY, which is right, the ETF for volatility. And what I really like about this one, right, we can see that had a lot of lines here. Don't pay attention to most of them, just pay attention to the 200 daily here. We came here, we tested that, we failed, and now we broke below this 50 daily moving average. And for some of you that watch the TTM squeeze, I'm a big fan of the TTM squeeze. We can see that we have this squeeze right here, and I'm actually looking for this squeeze to continue to play to the downside, so that price will continue to move lower, and that will mean that equities are more likely to move higher. But there's something that I want you to take a look here, right? You can see that we had a squeeze here. We had this really strong move to the upside. We broke the 50, we came down, but what happened? We had a fail, right? We have a failed breakout here above. So I'm actually kind of expecting for that. I'm actually kind of expecting for one day in which we can get a pop, perhaps all the way to this 21 or 50, or perhaps a little bit above it. And I think that's going to be kind of an opportunistic place to get some long trades, and then look for this meltdown here that will suggest that we get a melt up going into April in the stock market. That's one of the patterns that I'm looking at. And let me just show you this really quickly. This is a pretty interesting indicator. If you look at in the hourly charts, right? You can see here, this is the pop that we were mentioning right here. That's the pop that we were mentioning. And what you see in the indicator is that when the indicator is below zero and you get a pop above this 200 or this 50 hourly, because this is the hourly chart, that usually suggests that there's a chance that that is a failed breakout to the upside, and that most likely this is going to move all the way back down. So we're having kind of the same situation. Look at this. We're way below the zero line. We're way below the zero level. And now we get a pop above this 50. I think that will suggest a failed breakout to the upside in the UBXY. And that will give me a little bit more confidence to get long stocks. So those are the kind of the things that I look behind the scenes, especially with these volatility instruments, which are a little bit more complex. But thank you so much, guys, for watching. I hope that this video was helpful for you. I think that we will continue to the upside. I think that this is just the beginning of what could be a really nice uptrend that is going to be really beneficial for traders, for us swing traders that look to trade to the long side. But be aware that we are a little bit extended short term. And I think that it's going to be really crucial to be patient. You don't want to chase things, because some of the things that you don't want to happen is that we start in an uptrend, you get a little bit of FOMO, you get a little bit impatient, and then you chase the price, and then we pull back, and then you get scared and you don't buy the pullback. And then we get into this amazing uptrend, but then you kind of miss it because you chase it, and now you're scared, and that can really get into your mind, and now you're chasing again. So that you're scared to buy the pullback, and then the price moves up, and then you chase again, and then you kind of enter into this loop of chasing. So be really aware of that. And I wish you the best of luck next week. Be patient. I think this uptrend is here to stay for at least a couple of months, and it's looking pretty nice. And I think there's going to be a lot of opportunities. So thank you so much, guys, for watching. Don't forget to like and subscribe, share the video, share it with your friends. And if you have any questions, if you have some names that you want me to take a look at, just put it on the comments. I see you guys on future videos. Thank you so much, guys, for watching.